afternoon and welcome everyone to the IMF's debate on the global economy. I'm Sarah Eisen from CNBC's Closing Bell. Coming to you from the New York Stock Exchange, I'm thrilled to be doing this panel again. We are here to discuss the issues that are impacting the global economy, everything from the COVID-19 pandemic to inflation, and we have got the all-star panel here today. So let's dive right in. I want to welcome to the conversation, as always, the IMF Managing Director, Kristalina Georgieva, Kristen Forbes
Sarah.
from... Hi, good to see you. Sorry it can't be in person, although you told us last time it would be. I know it's coming back a little bit. Fingers crossed for April. Kristen Forbes is also here from MIT Sloan School of Management. Dr. Mo Ibrahim from the Mo Ibrahim Foundation and Chairman of the National Institute of Financial Research at Tsinghua University, Dr. Min Zhu. It's an honor for me to be here with such an esteemed panel of guests. Let's dive right in. Madam MDs, set the stage for us. You just downgraded the global economy at the IMF to a still pretty healthy 5.9% growth rate this year. Next year, a slight slowdown to 4.9% again, still pretty solid. So how is the outlook changing in your view?
Well, the downgrade for this year is really tiny, and we have to recognize we are on a path to recovery. But this is not the whole story, Sarah. The recovery is hobbled. I actually talk about it as walking with stones in your shoes. There is more uncertainty today than we had a couple of months ago. There is some loss of momentum in the US, in China, although they are recovering quite impressively. And most importantly, we are now seeing three problems looming bigger than they did in the previous forecast. Number one, divergence we warned about is becoming more persistent. Number two, inflation, we think it is transitory, but is creating much more anxiety and more focus of policymakers. And three, debt levels have gone up, understandably. We needed to support households and businesses when the economy was on standstill, but we are coming closer and closer to the time when that needs to be serviced. And in that context, we are looking into a very critical action we need to take if we don't want these problems to deepen in the future.
Well, Kristen, let me ask you, because the U.S. was one of the growth engines for this remarkably fast comeback that we have seen in the global economy. But now we're at a point where fiscal stimulus is fading, monetary stimulus is about to get pared back. Where does that leave us for the rest of the year and into next?
Yeah. So let me build on what Kristalina said. There's this great quote economists like to use when they talk about recessions and recoveries. Recessions usually occur with the speed of an elevator going down, but the recovery is the speed of an escalator coming back up. So quick downdraft and then a very slow recovery. But this recession and recovery is very different, and it was a very quick collapse. But the recovery has also been very quick. So it's almost like this cycle, we've gone down by the elevator and up by the elevator also. But that elevator up hasn't gotten us all the way there. We still have more room to recover. There's still workers out of the labor force who haven't come back. And that gets at this broader nature of this recovery is it's very uneven. You have some companies doing extremely well. They can't meet demand. They can't hire enough workers. They're raising prices. You have other companies still struggling. You go downtown and you see stores still shuttered and not open. It's very uneven in terms of individuals. Some individuals are doing great, working from home, working from a second home. The value of their assets have gone up. And they're doing just fine. And then there's other people who have health issues are still struggling to get back into work. And then companies, there's a big unevenness. Some companies are recovering. They'll close the gap from before COVID by the end of this year, and others have a long ways to go. So that's the challenge. It's in the US, it's in countries around the world, super fast recovery. So inflation is picking up, prices are picking up, but we're not all the way there. And it's a very uneven rate of recovery amongst different companies, amongst different individuals. So that makes it very challenging for policymakers. How do you support those who still need to be support, but yet cut back on stimulus because of the unusual pace of the recovery so far?
Are we still going to see 5-6% growth rates, or is that over, Kristen, in the U.S.?
I think we still got another good year as long as policymakers sort of do the right thing and keep some support, but withdraw some so inflation doesn't become too persistent. But it's hard to imagine you've got another year of 5 to 6% growth, especially even for the global economy.
Mo, we saw you smiling during Kristen's answer. Maybe the have and the have-nots is something that resonates with you, which would love to get your take on the recovery that we are seeing in sub-Saharan Africa. But, you know, the vaccine access is so critical and so challenged over there, which we'll get into. But just an overview of how you see the recovery playing out there.
Well, I'll start from Kristen's analogy there. African countries went down a very fast elevator, but we are not going up with escalator. We are going up the stairs, and slowly, and every now and then we stop to catch our breath. There is a major difference, really, between what is happened in the rich countries and what's happening in the poor countries, particularly in Africa. You send your people home, lock them up, and say, don't worry, we're going to send you a check every month and you'll be fine. Our leaders sent people home, but did not send us any checks or anything. And many of our people earn their living day by day. So the suffering really economically, I think, was more severe than the health hit by the pandemic. But understandably, I mean, we don't have the fiscal space. Rich countries spent about $11 trillion to deal with this. African countries have no fiscal space to spend. They cannot even borrow at reasonable terms. So it is a major problem still playing out in Africa.
And then there's China, Min, which was also very fast to recover and very strongly recovered. And then we had these rolling COVID outbreaks, which shut down parts of the economy. And now there's this massive debt bomb known as Evergrande. So where does that leave the outlook for your country?
Well, overall, I think that China have a strong growth, roughly 8% by IMF estimations. And I think inflation is still very moderate, and the financial actually quite stable. Yes, Evergrande, the debt issues really caused a concern, but I think it still is one company is really isolated, it's manageable, and now currently it's very much use the market approach, lets the company to discuss, negotiate with the creditors, and they still have a room to manage it, so government try to sort of coordinate it with both sides. I don't think it will create any systemic risk. I think the issue can be solved, and overall, and the financial stability is there, and the growth is quite strong.
Do you think that the Chinese government is going to step in to make sure that there is no systemic risk from Evergrande and other property developers?
Well, that's a good point. The tricky thing is whether we see systemic risk or not. So far, at this moment, I don't think we see any systemic risk. This is a company, they have a few debt issues, and the companies try to work hard. They have a space within the company, right? And the market also see they probably won't be able to go through. But whether it depends. If it's really get into sort of blow out in a big way, get into systemic impact, I'm sure the market will step in. The government will step in.
Madam Managing Director, wanted to bring it back to the vaccine conversation, which I know you're very focused on and is so tied to the fate of these economies. So enough vaccines have been given to vaccinate more than 40% of the global economy, and yet it's not happening equally. 40% of the global population, I should say, 20 times more likely to get vaccinated in a high-income country than a low-income country. So how do we fix that?
Yeah, well, to use Christine's analogy, I think it is great. We have the elevator countries, we have the escalator countries, and we have the stair countries, and the stairs are really steep. Whether we talk about vaccinations with advanced economies, some emerging markets now coming to 70% with at least one dose. And then we have the countries that are in the middle where vaccinations are likely to get to 40% by the end of this year. And then we have the low-income countries where we are struggling. Now, here is our dilemma. We have enough doses to vaccinate everybody, or rather to reach the 40% target in every country. What we don't have is the delivery that goes where the needs are most severe, and we do not have an ability to swap delivery dates, to have schedules that fit the needs of the world. So if you are an elevator country and you have delivery in October and you don't really need it so much, why not swap with the stair country and then get vaccines to go there with priority? And you put on top of this vaccination divide the fiscal space. Elevator countries, 28% to GDP support for their economies and their people. Escalator countries, 6%. The stair countries, less than 2%. Those two things combined are the drivers of this divergence. And now, why should you care, Sarah, living in the United States? You should care very deeply for two reasons. One, because if we don't vaccinate everybody everywhere, we're leaving space for new variants, and we know what the Delta has done to the US. Secondly, because when one part of the world is falling behind, interruptions in production there are quite severe. That affects global value chains. What does that do? Demand goes up in the escalator countries. They're recovering fast, but supply is not catching up, and we see that reflected in prices going with the elevator or with the escalator. We can discuss that, but prices going up. In other words, it puts pressure on inflation.
So nobody's safe until everybody's safe. Just very quick follow-up, Madam MD, would you support, so then do you support the WHO's position that the elevated countries should not be giving boosters to their population until shots are given more widespread to the global economy, to places like Africa?
Our analysis shows that production capacity is sufficient to deliver doses for those that are not vaccinated, and also to provide for booster shots, especially for elderly people, people with weak immune systems. We actually believe very strongly that the bigger problem is in ability to deliver vaccines to the countries that need it. In other words, to have transparent contracts and transparent delivery schedules, and to have in these countries health systems that can take the vaccine and turn it into a shot in the arm. So these two problems are more severe than production capacity per se. There is also a financial angle. If we are to be completely honest, we see still a gap of about $20 billion in grant money to help with this last mile, to get the shot in the arm, but also to provide other very, very needed elements of the pandemic response, like therapeutics, like masks, like hydrogen, so people don't die unnecessarily just because of lack of money.
Mo, I know you have to have an opinion here. Tell us how bad it is in terms of the vaccination rates across Africa, and what you think needs to be done.
Right. I think it's a terrible statement about global leadership, or rather the lack of it. We have seen G7, G20 meetings, etc., ending up really being more just a photo opportunity than taking any action. It is a problem. And the problem should be framed not in the just lack of solidarity, which is clear. But actually, misunderstanding even of self-interest.
Yes.
As Kristalina said, all those politicians, they know that their people cannot be safe until everybody is safe. And everybody, we all heard this from every politician. What they have done to do it? None. And what we saw actually is a bizarre race between various leaders in rich countries to say, okay, I vaccinated my people faster than you. Look, I'm going to be frank here. I'm unemployed, so nobody can dismiss
Please.
me. Okay, I mean, look, unfortunately, we don't have many statesmen or stateswomen at the moment. We really have politicians. And the main interest of our political leadership is the next election. What do I do to the next election? And it's clear what you want to do. I'm not going to increase taxes for to deal with, I'm sorry about this, to deal with carbon or 12. My intention now is really to vaccinate as much of my people to show that I'm better than the other leaders. And that is really very sad. So I'm really in despair, and I'm sorry, my phone is ringing, and I don't know why anybody want to call me now. I do apologize about this, but let us be frank. We don't see really leadership around us, and it is for the interest of their own people, and that's how the argument should be framed, not on basis of a charity, or so. I wish to see more. And you know what, Sarah? This bodes really bad because we have another big fight looming. We have a perfect storm. We have the pandemic, and we are not out of the woods yet. And now we all realize we have very little time to deal with climate change. Both of them need serious commitment and serious leadership, which we don't see, frankly. I'm rather pessimistic, really, about our future as a human race.
Kristalina, did you want to respond to that? You have your work cut out for you at G20.
I just wanted to say, not because I'm employed, but I'm slightly more optimistic because we have seen over the last month and a half that there is more mobilization to vaccinate the world. And we know that part of this is exactly what Mo is talking about, enlightened self-interest. We are going to lose $5.3 trillion over the next 5 years if we don't bridge the divergence in the recovery, and vaccination is the #1 factor to do it. And I also believe, Mo, that leaders are starting to feel pressure from their own populations, because if this is a yo-yo recovery, we open, we close, we start going together in meetings, then we stop. That is not necessarily impressing citizens in countries, and that sense of, okay, you can do better, is going to help.
The problem, Kristalina, they are not smart enough to see that.
Yeah, well,
that's the problem.
I think we see the dosages have gone up, vaccination rates have accelerated, not as much as necessary, but a little bit of this is happening.
Well, I just want to move forward. Go ahead.
Excuse me, Sarah, of the $11 trillion those guys spent over the last year, less than 1% would have vaccinated the whole world. So,
Kristen, I want to get to you, but I also sort of want to add a new element, which is in a country like ours, it's in a way it's even sadder because we only have just over 50% of our population double vaccinated in a country where we don't have an access problem or a spending problem, and we were the first to come up with the vaccines. So does that represent an economic headwind for this country?
Yeah.
And weigh
Yeah,
in.
that gets
Sure.
at exactly the point I wanted to make, linking to the comments that were just made, is if we want to recover, if we want to get incomes back to where they were before and make up the lost ground, the only way to do that is to get vaccines out and get populations vaccinated. Whether that's countries, I think some of the statistics in the IMF's latest report that less than 5% of populations in some low-income countries are vaccinated, that obviously needs to go up. In advanced economies like the US, we still have to vaccinate more people. The only way to get that elevator back up to where it started, back to my initial analogy, is going to be to get vaccines out there. The IMF has a pretty striking graph in one of the reports they just issued, which shows that key to how quickly countries are recovering and closing their output gaps. It's not even how many COVID cases they have. It's not as much the policies. It's how many vaccines you've got. So that the issues around vaccination directly links to the economic challenge of getting economies to recover. That is the linchpin.
Min,
And
how's it going in China?
Christian, one of the sad things is that some vaccines now is starting to expire on the shelves of some of the rich country because of the reluctance of citizens to take it. Is it not sad for a vaccine to expire when people out there are suffering? Is that not ridiculous?
It's very ridiculous, I think.
Yeah.
I would
No,
agree.
it's a-
Yes.
That's
Yeah,
one we
it's a-
don't have to debate. Min, how's it going in China? Are the Chinese vaccines working? And how much are they providing access to the rest of the world?
Yeah, I think vaccination is the key, as Madam Managing Director mentions, for the global economy for end of this year and for next year as well. The statistics in the US made this very clear. A state with a higher vaccination ratio, the growth has been stronger, right? I mean, even within the US, you can see a clear picture. And in China, we're very serious about this deal with COVID-19, about the vaccinations. And the vaccination ratio is now, double shot across more than 50%, one shot across 70%. But also China's doing its own bit, donate the vaccines to the other countries and also spare the manufacturing capacity with other countries as well. But the whole thing is really the global leadership. I think the mathematics is very simple, right? The $20 billion to save roughly, as the managing director mentioned, $5.3 trillion for the next 5 years. It's so clear. We just need the political leader getting together, agree, for example, use new SDR, put them out as roughly $20 billion, and then we're getting done. So IMF has a lot of things to do.
I also want to hit inflation because that's another big risk to the outlook and was mentioned all over the world economic outlook from the IMF. And you guys all feel it in different parts of the world. Kristen, how big of a headwind do you see inflation right now for the U.S.? We talk about it every single day because every single company that reports earnings or pre-announces is saying that they're feeling it, whether it's supply chain constraints, labor shortages, all adding up to consumers paying higher prices.
You know, it is striking how the debate has changed in a year. Just a year ago, we were worried about inflation always being too low. And could you ever get inflation back to targets? And now we're worried about the exact opposite. So I think on one level, we should all breathe a sigh of relief. We don't need to worry about deflation anymore in the cycles we've been in the last few years in advanced economies. And we know what to do when inflation picks up. You do have the tools in advanced economies. You know, in the US, if inflationary pressures are persistent for longer than people are expecting, we know what to do about that. It'll involve raising rates. That will involve another set of risks. And I think that's one of the biggest vulnerabilities going forward is the world needs to get ready for potentially faster series of rate hikes than a lot of people are expecting. But if inflation is the biggest concern, you do know how to deal with it. It's just then the side effects of dealing with it that I think are the biggest risk and issue out there.
Wait, Kristalina, didn't you warn central bankers not to move too soon with rate hikes when it comes to fighting this inflation?
What we are saying is that as long as we vaccinate the world and we move to a place where even we still have residual COVID, it is not holding back sectors and economies, it will be transitory. But we have to watch it. And in the report we just published, we are saying be vigilant. Why we are saying that? We are saying it because we may be faced with a new phenomenon, and we are searching for a term for it. Is it growthflation, when some countries and sectors are growing fast, but others are falling behind, interrupting supply chains and creating this pressure on prices? Is it because we have generated so much savings at the time when the economy was on standstill? In any case, our message is, for advanced economies, very likely by mid-next year, we are going to see inflation receding, again, provided we wrestle with the pandemic more aggressively. But in many emerging markets and developing countries, inflation is already a problem, and central banks are already raising interest rates to deal with it. So what is to watch? Are inflation expectations de-anchoring? And then take necessary measures. We talk a lot about supply chain, but we also need to add to that other factors for interruptions, like climate events. What we are seeing, for example, for food prices, they're being pushed up by 30%. And imagine in poor countries, poor families, what it means for them. And where is the push up coming from? Multiple sources. Energy prices up, interruptions due to weather events hurting agricultural productivity, transportation costs. We see that being a big factor today. All of this piling up and pushing prices in a way that does cause us definitely a pause for poor countries, for emerging markets, and it has to be watched carefully in advanced economies, because imagine what it would be if the Fed in the United States was to have to respond to inflation expectations de-anchoring. How would that translate into pressure on interest rates in emerging markets with high debt levels that are not yet growing the way the United States is?
Could be a nightmare. Min, curious your take here. Is this a transitory phenomenon, and what does that even mean?
Exactly. That's the key issue. I think when we talk about inflation, the key word is transitory. I see the drives for inflation escalating is a non-transitory, right? For example, structure change. For example, the climate change related energy structure changes, commodity price changes, labor market constraints, right? And all those things are non-transitory. So I don't see the inflation as a transitory. I think the inflation is really on the way up. We got to be very careful about that, because it is, for the whole world, particularly it's important for emerging market, low-income country, when Fed changes policies on the interest rates and the capital flow moves. We observed that happens in 2013. So the transitory is really the key issues. I think that the view is very much divided. But from what my view I can see is, even in China, the CPI is relatively moderate, but PPR increase very strong, reflect the very high price on the commodities, on the energy price, and on the shipping costs, and on the supply disruption as well.
Kristen?
I wanted to jump in here on this. Raphael Bostic, the president of the Atlanta Fed, gave a really nice speech yesterday on this transitory debate. And he made this neat point. Yeah, when you hates that word, don't use it anymore. He suggests using episodic, which I think makes sense. Because if you look up transitory, he claims, there's two definitions. One is of short duration, and the other is temporary. And the economists can use that. They can mean very different things. Short duration, this is not going to be a short duration spike in inflation. This is going to last longer than people had expected. But it may still be temporary, just not short duration. And that's where the term transitory gets confusing. So I think episodic captures that better. But my overall take is a lot of the price pressures right now, they will be longer lasting, but they should be temporary if met with the right policy responses based on the country. For some countries, that means they can sit it out. If they have well-managed inflation expectations, don't have a history of high inflation, they probably could wait it out. and not act aggressively. Other countries where they have a history of high inflation do need to act more aggressively. And that gets at Kristalina, I thought one of your key messages, which you didn't use the word this time around, but is so important, was calibrate, the importance of calibrating policy. We don't know how quickly the supply side will recover. We don't know if this high inflation today will start to feed into wages and prices and inflation expectations. So we really need to sort of feel it out, and every policymaker will have to adjust course. So for me, the most important thing is just being flexible. Don't announce ahead what you're going to do over the next year. Central banks' fiscal policy needs to wait and see how the virus evolves, what happens with inflation, what happens with growth, and be ready to calibrate based on your country.
But do you think, Kristen, the Fed is going to raise rates multiple times next year?
Well, first they've got to taper. My personal take is they've been a little slow at getting that going. The economy's bounced back pretty quickly. I worry about asset prices heating up too much. I wish they'd gotten the tapering process going earlier. I think they do need to finish that before they start to talk about raising rates. I think there is a scenario they might need to have that discussion next year. But first, they've got to get tapering in process.
Should start in a few weeks if everything's on track. Mo, another problem for Africa, soaring food prices and a potential tightening here from the world's largest central bank. What does that look like?
Well, it's a problem for us, to be honest. And one thing actually we're looking for to stimulate our economies was the issue of SDR and recycling some of the SDR. The SDR actually is what, $650 billion. The share of Africans is about 33 billion, is less than 5%, which is ridiculous. The guys who spend $11 trillion are actually taking more of this $650 billion, which is the only, Africa, our share of this is the only source of cheap finance for our economies. So we have been talking about recycling, and countries are still dragging their feet. I know Kristalina was hopeful to try to convince the shareholders to recycle maybe 100 billion. And I don't know, maybe you tell us, Kristalina, where are you with this? I mean, those guys are dragging their feet. I heard only US and France are doing something. Is that true? What is the picture?
I'm so glad you asked. We just finished our committee meeting, the IMFC, and I have news to share. We got very strong support for on-lending, or as you called it, recycling of SDRs, exactly for the reason you described. We have issued $650 billion equivalent, but low-income countries, vulnerable middle-income countries are getting a very small portion of it. So our proposal to the membership is countries in strong positions voluntarily can on-lend some of their SDRs, and the target is $100 billion equivalent. Where we are is already quite a number of countries have announced they will do it. They have even given percentages how much they're going to pass through. We have two avenues. One is, we call it Poverty Reduction and Growth Trust. It is for low-income countries, zero interest rate, genuinely high concessional financing. And the news of the day, Mo, is that we are going to create resilience and sustainability trust that will be for low-income and vulnerable middle-income countries. My aspiration is to see it in action as soon as possible. And then we would have one more instrument at the IMF for longer-term concessional financing. And it would help not only with a crisis like this one, but also with the transformation of economies. Since Christine brought up calibrate, the messages from this meeting in terms of what needs to be done are vaccinate, calibrate, but also accelerate the transformation of economies to low carbon, climate resilient, digital inclusive path.
This is wonderful, but can you share with us some of the numbers? Where is the beef? I just want to see
what
numbers.
I can say is that a couple of countries have announced that they would go in the direction of France, which is 20%.
Yeah.
We had a number of countries saying, today we are not going to announce, but we have high ambition. When I took my calculator and I said, okay, let's see where we are going to land, the 100 billion number is very, very achievable. My more important message is that willingness of the membership to equip the fund with a longer term maturity instrument because of what is necessary to bring transformative policies in emerging markets and developing countries, in middle income and low income countries. Why does that matter? Because if advanced economies invest in green growth, in smart growth, and developing economies don't, we would have one more line of division in our world that is going to do exactly what lack of vaccination is doing for the pandemic. Advanced economies reduce carbon emissions, but the rest of the world doesn't. So Mo, I'm celebrating. I think tonight I am going to have a glass of wine.
Too. Okay, thank you.
But I'm glad you brought up the point, because, you know, one question I was going to ask a number of you was the role of the IMF and international coordination right now. And Min, maybe I'll turn it to you, and whether, you know, this question comes up a lot, but whether there is a challenge set up from countries like China and some of the other emerging markets countries against institutions like the IMF, and whether that represents a challenge for the fund, but also for the global economy, and just another layer of friction between US and Europe and China.
Well, the fund used to be a crisis manager, right, and provide a short liquidity funds to the countries in troubles. But I think the global situation changes quite a lot, as the managing director mentions, right? We're facing more long-term, more global issues. So we need a quick response, but also we need long-term concessional financings for low-income countries and the emerging market as well. And I'm so happy I heard the fund is going to build a IST and also long-term concessional financing instruments. I think this is really fantastic. If we can get $100 billion for all those things, I think it will help emerging market low-income countries in a big deal. And the only thing is I hope that all the countries can move quickly and get this $100 billion in the package and can quickly move into the low-income countries and the emerging market as well.
It's not really a fair question, Kristalina, because everybody here on this panel is very much an IMF person and supporter and has either worked at the IMF or is on board with the IMF. But I do wonder how you think about the question, especially in light of, and we don't need to re-adjudicate everything that's happened lately, but with some of the accusations that you faced lately about bias towards China at the World Bank, and what the future of these institutions is in a world that is polarized and there is this power struggle between the US and China.
Well, let me first say, cleared. My board, yes. The board of the IMF looked at the evidence here and there and concluded there was no there. But the more important point is, how do we keep the membership together? And today, during the meeting of the IMFC, the membership was so clearly together, focusing on these very big challenges we are wrestling with, immediate challenges, and those that are further down on the horizon, but are so significant. What is fantastic about the IMF? 190 members, big and small, rich and poor. And we have created this culture of engagement that is really one to focus on issues. And the tone in the room, the soberness with which we discussed the pressing issues of today and tomorrow, the very simple conclusion that policymakers today are faced with the most complex, immediate and long-term challenges and the most difficult trade-offs. And they need to work together. They need to learn from each other. Otherwise, we are all going to be worse off.
Yeah, if I may, I would like to add one point. I think IMF chapter made it very clear. The share of institutes have to be located by the size of a country's economies, right? So with that, I think the global share really changed in quite a dramatic way in the past 20, 30 years. And China, for example, become the second largest economy, but still China is the third largest shareholder of IMF. So the governance structure reform, I mean, is just to have to happen to follow the real world change. I think it's the same thing. The first part I said, IMF's change is a function, it's a role to follow the change in nature of the global economic and the global stability issues, move into the IST and the long-term concession loan. I think it's fantastic. But also on the governance structures, we have to move together. In that sense, US and China, the Europeans all have to work together, make sure the credential of international institutes.
So we just have a few minutes left, and I always, we spend a lot of this time talking about the global economy, talking about the risks and the threats and what keeps you up at night, and that usually makes the headlines anyway. But I would love to end with a comment from each of you on something that makes you optimistic or that you're excited for what's happening in the coming year, whether it's William Shatner going to space at age 90 or whatever it is. So Kristen, let's start with you, and we'll hold you to some of these predictions or optimistic views.
Okay. First, I'll say one positive about what's happened over the last year. It's obviously been a horrific year and a half. But if you looked at what we were talking about last year at the bank fund meetings in October, there was so much uncertainty. We didn't know if there would be a vaccine. We didn't know if there would be a sharp recovery. And it really is remarkable, given the extent of the shutdown in the global economy, governments, people telling people, stay home, shut your business, don't go to work, how at least in parts of the world, things have come back much faster than we would have been expecting a year and a half ago. And that's a combination of rapid policy, massive, unprecedented policy support, plus technology and the ability to find vaccines. So we now do have a path, even though some countries are lagging behind. It's going to be a lot slower recovery, up the stairs, not even talking about an elevator. There is a path, and we do have vaccines. We do have a path forward. And in many countries, there was a policy support to help people. Well, we found that path and found the vaccine. So, still huge challenges, but it could have been a lot worse, and we wouldn't have a path out if we hadn't had technology. And that's where I get the positive looking forward, reflecting MIT, the school behind me, is the power of technology is where I have a lot of optimism. We saw the power of technology to come up with vaccines at an unprecedented pace, crank them out, not fast enough, but much faster than most people would have expected. We're seeing companies rethink how work is done now. You may not all need to be crowded in an office in a big city. We're seeing companies come up with all sorts of ways to use technology to be more efficient and hopefully get costs down in the future. So I think it's an incredibly exciting time of technological change. And that's what I'm optimistic about, is this pandemic will accelerate the change and force companies to adopt some of the new technologies, use the internet, use the web, use these technologies at a much faster pace because they're being forced to reorganize right now.
Mo, what about you?
I'm really concerned about our global cooperation and global governance. At a time when we are faced a number of global challenges, whether pandemic or the climate challenge, we really need more than ever global cooperation, because no single country can deal with this issue. And there's no vaccine against global change. But what we're seeing is the stress in the global institution, global system, the lack of cooperation, the emergence of two
This was supposed to be
powers which
something
are not.
optimistic, Mo.
Mo,
No, I
if this
need to
is the
be
most
realistic,
optimistic you
I
can
have to be
do,
realistic.
I don't want to know you're pessimistic.
No, but look, guys, I'm not pessimistic. I'm not optimistic about what's going on because I'm really worried. In Africa, we say something very important proverb. I think very good, applicable here. When elephants fight, the grass get trampled, and we are at that kind of moment actually. So let us be careful. I know this is not cheerful, but it's really
Fair,
realistic.
fair.
Let's just come together and find a way to work together to deal with these international challenges. I hope so. I'm sorry for being such sour and dour member of the panel. I'm sorry.
No, we appreciate the candor. Min, what about you?
I think the climate changes really bring a lot of optimism to us, to everyone. I mean, I agree with Christina. In China, the carbon neutrality commitment in 2060 is a really, really big deal. I think I can see it will push the Chinese economic system reform. It will change the technology innovation. It will make a sky clear, and it will change the people's consumption behavior as well. So it is really a paradigm shift in China's development model. So that's give me a lot of optimism and also bring the international cooperation. I think this is fantastic. I think that all of us 5 years ago in Paris, we can never ever imagine in 5 years we have more than 130 countries signed up for a climate change deal. So that's really good.
Kristalina, I know you to be a very optimistic person.
I am. We just got 136 countries to agree on a global tax deal after 10 years of wrestling with it. What makes me optimistic is that we are starting to draw the lessons from this crisis. After the global financial crisis, we built a more resilient banking sector, and it has paid back in this crisis. Now what we recognize is that the concept of resilience has to be much more comprehensive. We need resilient people, educated, healthy, with good social protection. We need a resilient planet, and there is a momentum that wasn't there before. And we need to have resilient institutions that make economies more able to withstand shocks, the same way people with strong immune system withstand COVID. Countries with strong institutions, with vibrant economies, high level of competition, transparency, they withstand economic shocks much better. So I expect to see us taking more that concept of resilience in a fast-moving, shock-prone world to heart. And perhaps I would finish with, remember before the pandemic, we used to say the future is digital. With the pandemic, the future has arrived, and we are adapting to it, hopefully reap off the benefits, manage well the risks of this digital presence.
And that digital presence allowed us all to be here together, and I thank you all, because we are out of time, for doing it. Next time in person. This time I'm serious.
Yes,
Kristalina.
we do. Thank you.
God willing. Thank you all to the panelists. Thanks for watching as well. It was a great discussion, and I am honored to have joined you for it. Have a good afternoon.
Thank you, Sarah.
Thank you.